Hello and welcome to our channel. This is the third chapter in our webinar series on money or cash-in-transit insurance. In this chapter, we will look at key components of money or cash-in-transit insurance policy. A money or cash-in-transit insurance policy is designed to provide coverage for the risks associated with the transportation and storage of cash, securities, and valuable assets. The key components of such a policy include 1. Definition of money. This clause provides a clear definition of what is considered money under the policy, including physical currency, coins and banknotes, negotiable instruments, and other forms of monetary value. 2. Insured events or perils. This outlines the specific risks or events for which the policy provides coverage. It includes scenarios such as theft, robbery, burglary, damage during transit, employee dishonesty, and more. 3. Coverage sections. These sections define the scope of coverage for different scenarios, such as coverage during transit, coverage while in premises during business hours, coverage for cash in the hands of authorized employees, coverage for damaged safes and strong rooms, and more. 4. Geographical limits. This specifies the geographical areas where the coverage is valid, including transit routes and storage locations. 5. Limits of liability. This indicates the maximum amount the insurer will pay in the event of a covered loss. It may include separate limits for different types of coverage. 6. Deductibles. These are the portions of the loss that the insured must bear before insurance coverage comes into effect. Deductibles can vary based on the type of claim. 7. Exclusions. Exclusions specify circumstances, events, or conditions that are not covered by the policy. Common exclusions might include losses due to war, nuclear events, intentional acts, and more. 8. Security requirements. These outline the security measures the insured must adhere to, such as the use of armored vehicles, GPS tracking, alarms, safes, and employee training. 9. Employee dishonesty. This section might extend coverage to include losses caused by dishonest or fraudulent acts of the insured's employees. 10. Claims handling. Details the process for filing and handling claims, including required documentation and time frames. 11. Premium. The cost of the insurance policy, which is influenced by factors such as the insured's risk profile, coverage limits, deductibles, and security measures. 12. Policy period. The duration for which the coverage is in effect, typically specified in terms of months or years. 13. Cancellation and renewal. Specifies the terms and conditions under which the policy can be canceled or renewed. 14. Legal liability coverage. Some policies may include coverage for legal liability to third parties arising from cash-in-transit activities. 15. Additional endorsements. Optional add-ons or endorsements may provide extra coverage for specific needs, such as coverage for cash in premises outside business hours, coverage for transit by third-party carriers, and more. 16. Conditions of coverage. General conditions that outline the insured's responsibilities, such as notification of changes, cooperation in investigations, and compliance with policy terms. It's crucial for businesses or individuals considering a money or cash-in-transit insurance policy to carefully review all these components to understand the coverage, limitations, and requirements. Tailoring the policy to the specific needs and risk profile is essential for comprehensive protection against the various risks associated with cash handling and transportation. Some common clauses under money or cash-in-transit insurance policy. The listed clauses are extensions or additional coverages that may be included in a money insurance policy to provide a broader scope of protection. These clauses expand the coverage beyond the standard risks typically covered by a basic money insurance policy. Here's the breakdown of each extensive clause. 1. Damage to employees' clothing and personal effects due to assault. This clause covers damages to clothing and personal belongings of employees that result from an assault during cash transportation or other covered activities. 2. Fire, explosion, earthquake, all special perils. Extends coverage to include losses caused by fire, explosion, earthquake, and a wide range of special perils that may damage or destroy the insured's cash or valuables. 3. Infidelity of employees. This clause covers losses due to dishonest or fraudulent acts committed by employees that result in the theft or misappropriation of money or valuables. 4. Notice of cancellation 30 days. Specifies that the insurer must provide the 30-day notice of cancellation to the insured before terminating the policy. 5. Policy subject to annual declaration of total cash carried and premium adjustment. Requires the insured to annually declare the total amount of cash carried, which may affect the premium amount. 6. Riot, strike, and civil commotion. Provides coverage for losses resulting from riot, strike, civil commotion, or related disturbances. 7. Personal accident assault. Covers personal accidents suffered by employees during cash transportation due to an assault. 8. Automatic reinstatement of loss. This clause automatically reinstates the sum insured after a loss occurs, allowing continued coverage without requiring policy renewal. 9. Transport warranty. Outlines specific security measures and conditions for transporting different amounts of cash, including requirements for senior officers, directors, armed personnel, or security firm escorts based on the value of cash being transported. These extensive clauses enhance the money insurance policy by providing coverage for a wider range of conditions of their specific policy, as each clause can have significant implications for coverage, claims, and obligations. End of Chapter 3. Let's meet again in the next chapter and discuss additional coverage options under money insurance policies. Stay tuned for that.